Now the market's open. What are you doing after the market opens? This is pretty interesting because what ends up happening here is a lot of traders, I'm trading. How am I going to have time to write during the day? You're not writing a book. You're writing bullet points. 3 to 5 to 8 words that are something you want to remember later and then write in more detail. The same way you would outline an article. In this case here, you're jotting down observations. Put this tape on pause right now. Put the video on pause. During the trading day, here's what you need to write down when you put this on pause. During the trading day, you are jotting down bullet point observations of what you see. You are looking to develop the skill to improve what you see so that you can continue to gain conviction in your ideas, which ultimately leads to, I see the signal, I put the trade on. I see the signal, I put the trade on. When you can do that, you allow probabilities to play themselves out quicker when you have a good strategy, which makes you earn money quicker when you get to that point. Okay? So during the day, again, Wednesday, June 15th, in this case here, right? Market opening flat will enter the first 5-minute signal. So now, how does that play into what we wrote in our journal? We expected a bullish opening, but we expected a little higher opening because of a strong close yesterday. So now we're adjusting, right? Remember we said a lot of stuff about adjusting? Market open, flat opening. That's translating into we're going to open and get involved early because it's not an exaggerated gap. So any bullish entries we're going to get involved with quickly. And that's just a bullet point. What is that? 2, 4, 6, 8, 10, 9 or 10 words there? Doesn't take a long time to write down. As a matter of fact, you can even dictate it to yourself into your phone. And if you use Evernote, you can actually record that. You record your voice. You don't even have to write it down, and it transcribes it. All right, first bounce. Filled on 3 longs will add. So now I'm just writing down an observation. Got filled on 3 of my 4 trades. Maybe the 4th one didn't hit my limit order. And I'm planning to add. And why am I planning to add? Well, let's think about that. We expected a higher opening. This flat opening is leaving profit potential. We're not opening way up into an area where it diminishes profit potential. So we're looking to add based on the flat opening. So now during the day, we're journaling. We're writing down our thoughts of how the day is unfolding, how we're perceiving it, and how we plan to trade it. Because what's going to happen is you're going to read this after the market closes, late at night, on the weekends, that kind of thing. When you're not in the emotional part of the trade, you're going to say, you know what? Wow, what was I thinking? It was going straight up or straight down or flat or that kind of thing. It's kind of like reading your own stuff with fresh eyes a couple of days later. But here's the key. 2 reasons. Number 1 is you need to write this down now, because if it's happening at 9:50, 9:55 in the morning and you think you're going to remember what you were thinking at 5:30 at night, not a chance in hell. No way are you going to remember exactly what was going through your mind. So that's the first one. You're writing down the real raw thought process of what what's going through your head. And then number 2 is when you read it later, let's say on Saturdays, let's say maybe you devote time on Saturday to read over your trading journal. It's such an unbiased real assessment of what was going through your head. So you'll be like, okay, I wrote down the market bounce and I was looking for a flat entry, and you look at the chart, you're like, what was I looking at? The thing was a giant gap. And sometimes we can filter what we actually see from what's actually going on because we want to see something. So can you start to see now why I say your trading journal is your most important book you'll ever read? You're literally scripting your trading success. You're writing the book of how you will be successful. If you fail to write that book, it will be extremely difficult for you to be successful. But if you write these little bullet points during the day, let's get to the next one, you're going to ultimately be writing out how you plan to be successful. What's the exact script for you to be successful? So now we already know in just these couple of sentences the market's bouncing. We got filled on some longs. Now we had short sales in our trading journal. My 2 short sale stocks are bouncing with the market. I will not short them. Now how is that important and why is that important? Number 1, we're making an assessment on stocks that we were considering shorting. So what is this telling us right now? What are we getting out of our subconscious and writing this down? We're saying the whole market's probably strong right now, right? Even our weak stocks are bouncing. And I will not short them. So now that's a key there, right? What happens later if you read your journal and you find out you shorted those 2 stocks? You could be breaking your own rules. So again, you're scripting your success. Next, we start to make some observations. Again, just observations. We're not writing a whole book here. The tick reading, continuing to print positive 750, positive 1,000. And you're making another observation. I will hold my longs on pullbacks. So what are you doing right now? You are telling yourself a pullback in the market is expected, and I plan to hold it because the overall big picture of the market, the tick readings, which are the uptick versus downticks in the market, are strong. They're telling us there's an underlying tone. So here's what's going to end up happening. There's going to be some point during the day where the market's going to pull back, and you're going to be scared out of your pants because you're seeing your positive P&L whittle away. You were up 1,000 or you were up 1,100, and all of a sudden it went from 1,100 to 650. You're like, oh my gosh, there goes my car payment. I am telling you, this is how you get to the point where you discipline yourself and you give yourself the confidence because you're making these observations after the market opens. Now, the market's open, it's rolling through, so you're literally helping yourself. I will hold my longs on pullbacks. You're making an assessment. The weak stocks are bouncing. We're getting positive tick readings. You're telling yourself, and this is where you get to the point where you say, I understand how to make more money because I understand how to put the pieces together. And that's all the things that we're going to talk about in the program, right? 15-minute melted candle on XYZ long. What's going on there? All of a sudden, the stock that you're long, and obviously XYZ stock is an example stock, all of a sudden, one of the stocks that you were looking at before, you're seeing a melted candle. You're seeing a smaller body. You're starting to see indecision. So what's going on now? What decision does that make? So you made the observation. Now you write down, I'm tightening my trailing stop. I'm going to move up a trailing stop on that one stock out of the three that you're long because now you're saying I'm making adjustments because I'm starting to see something a little bit different in this individual stock. The other two you're going to continue to let hold, and you're not getting out of this trade. You're going to change your decisions. You're going to make adjustments based on what the market's telling you. Remember, every trade you put on, we talked about this in a previous video, it's feedback. It's not an assault to your ego. It's not you trying to prove yourself right. It's feedback about what to do and how to manage a position. You're not predicting. You're not forecasting. You're trading on probabilities. Well, the probability is my strong stock is telling me there's indecision. Now I'm going to weigh what that indecision means on the pullback. Do I get big red candles follow that, or do I get more inside tiny candles? But I know that something different's going on in this stock compared to the other two, so you're going to tighten it up. Next, some stocks in my main list reach their average true range. Remember, we discussed that's one of the many different ways we talk about in the program of assessing profit potential. So now you're saying my main list is reaching their profit potential. So now these aren't even stocks that you're trading today. This is what you might call your own version of the Dow, your own version of the S&P 500. So you might have Amazon, a Goldman Sachs, and Facebook, and a good mix of tech stocks and financial stocks and other stocks. You might not even trade them, but they're your little core list of what's going on in the market. Now you're going to make an assessment. You're going to be like, oh, Facebook normally moves $3 in a day. It's already gone $2.90. My main list that represents the market is reaching what we might call a saturation of its profit potential today. Interesting. So there's not much upside left at 2 o'clock in the afternoon. I'm going to trail the balance on the stocks that I normally trade. So think about what you're doing now. You're making an observation in stocks you're not even in and how that might affect your trade management in the stocks that you're looking at. Pretty darn cool stuff here, right? You're not writing a book. You're just saying, what am I noticing? What am I noticing? What does that mean? What am I noticing? What does that mean, right? Next, you're going to go to a market internal. You're going to look at the VIX. You're going to be like, you know what? The VIX turned higher here. I know I'm only looking at it on a 5-minute chart, but if the VIX is going down and all of a sudden it starts to turn higher, the VIX works indirectly. It works opposite to the market. So if the VIX starts to bounce, that means a little bit of fear, maybe a little profit taking is coming into the market. It's only the 5-minute chart. I'm not going to make too much out of it because it's a short-term indicator in that window I'm looking at. But you know what? I have to say to myself, is this a top in the market? Now that doesn't mean to sell short because the whole market's strong. But what does that mean? Maybe if we're topping out, that might mean that I need to tighten up my trailing stop. Maybe I'll scale out of some of my trade. But I'm not doing anything yet because those powerful tick readings, I'm starting to notice now. I'm just going to make a note for what's going on later. I want to go back to that. See how you're learning from your own book, right? All right, next, Nasdaq still strong. So 3 words, that's all I'm writing, right? I'm not writing a book. Going higher, Nasdaq still strong. Observation. So tech stocks is still strong. Look at my pre-market trading journal. I noticed tech stocks. Maybe I might want to take a look at those, right? Next, final journal in between the 9:30 and 4 o'clock time frame. Plus 1200 tick reading. That's pretty strong. Later in the afternoon, my main stocks are reaching their average true range plus 1200 from what I learned in the course. 1200 is a really strong reading where there's a lot of stocks on one side of the boat. In the afternoon, I'm going to start to exit my longs into momentum. I'm not scaling out. I'm going to be getting out based on those readings. So just in that one little one-page example, I didn't write a heck of a lot there, but all I did was jot down my notes. What does that mean? How does that translate into a trading decision? And then again, you go back to a lot of the stuff later. Now what do we write?